Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at crypto.com. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Also, if you want to support Ukraine, you can donate to the Ukrainian refugees and to Ukraine's military by going over to one of the official links down below in the description. Okay, the funds do not go through me in any sort of capacity. And thank you all for donating and supporting me and Ukraine during this war. So let's get on with the video. So jumping into the weekly chart right now, we have the 20 EMA and we have the 55 EMA. Now, one of the first things that I see is the gap in between the 55 EMA and the 20 EMA. Now, when you have such a large gap and when the price is so overextended from the 20 EMA, you have a gap in between the price and the EMA. This usually means that once the price is going to be coming back down for support, it's going to be harder for the 20 EMA to hold the price as support. That's just an easy way of explaining it. And once that happens and you come down for support, as you can see, you had two moves below the EMA, then you had another move and you started opening candles below the EMA. Then you had a strong breakout in March, okay, on the weekly chart. But since then, you have been in a nasty downtrend. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9 red candles. And we're going to open up potentially another red candle very soon because it's Sunday while I'm recording this video. And what we're doing right now on a technical standpoint, or from a technical standpoint, is we're landing on this swing high that we had in August of 2020, right? So you did break above this just a little bit, right? But then you went back down. You got a hit with this resistance once again, just like you did over here and just like you did over here. Then you broke out here in November last year, and now you're coming back down to test this support, right? Because this has now flipped to support. And then when you're going to be coming back up, you're going to run into this resistance at 22 cents over here because this was a strong resistance level that we had. So we have to break that, back test that as support. Then you're going to run into this resistance level over here at 37 cents because it was a strong support level, which got turned into resistance once you lose it. Now, what you want to be looking for is a death cross or a bearish cross on the weekly chart here. So this is when the 20 crosses below the 55 EMA, and that is your confirmation of the bear market or the confirmation of a downtrend. And usually you do come even lower after you have the death cross. You tend to drop down a little more, but usually once you get the death cross, that means that you are somewhat closer to the bottom. And this means that once you get the death cross, you can start thinking about dollar cost averaging. If you're buying for the long term, then these prices are good to buy in because from the all-time high, we're down 82%. I think this is a fairly good discount, right? If you've been buying at these prices over here above 50 cents, then right now below 20 cents is a good area to dollar cost average in. And what we're doing right now is we're printing a higher low, which is good because on the weekly chart, we are in the large scheme of things, we are still in an uptrend because you have this low that you printed December 2020. Then you have the swing high here, you have a higher low, and then you have a higher high over here. And now you're coming back down for a higher low. If you start losing this low that we printed in July and June, that is going to be bearish. And it is possible we are going to do that. It is possible. It all depends on Bitcoin. If we're entering this crab market for the next couple of months and we're going to be consolidating and Bitcoin's going to be getting destroyed, right? Then altcoins are going to bleed even harder. The Bitcoin dominance chart is rising, and this usually means that the alts are going to be dying out. And the strong alts are going to survive. CRO is one of those altcoins in my opinion. So even if you come back down and retest this low over here, that would still be bullish, right? And you are potentially just setting or printing a huge double bottom pattern, which is a reversal pattern. Now, you do not want to be losing this swing low, okay? Once we do that, we're going to chart the targets from that to the downside. But as of now, this is your technical target to land on if you're going to go below these two swing highs. Potentially, this could be our bottom, right? But no one knows that. You have to be ready for more downside potential. Jumping into the weekly RSI here. So you can see that you're coming back down to the oversold, and once you get into the oversold zone, that will be your signal. That will be the most bullish signal out of all, in my opinion, because if you enter the oversold below the index of 30 on the weekly RSI, this means the asset is very oversold, and this is the time to be buying. Because usually once you enter these oversold zones, you do recover pretty quickly, in my opinion. This is one of the best indicators to have on you. And yeah, that's it for the weekly chart. Let's jump into the daily. Okay, jumping into the daily chart, I'm going to remove the smaller fib so that it's not too distracting. So what you can see over here is you do have a large support trend line. So you have this white trend line, this diagonal white trend line. And as you can see, you have been adhering to it as support. But here in April this year, you lost it, you back tested as resistance, and now you're coming back down. And you're landing on the 0.5 Fibonacci support level at 16.5 cents. The swing high of the Fib retracement is all the way here in February, and the swing low is all the way here in June of last year. This gave us the target of 82, almost 83 cents, and it was met perfectly. So if you had this Fib with me, in October/September, you could have seen this target and you could have taken some profits, and this is what we've been talking before. This is what we have been talking about before this huge pump started, is that you have your 1.618. You start breaking through the first fib level, you're looking at the 1.618. Simple as that. Now, what happened over here is we had this pink ascending triangle. Obviously, we broke down from that as well, and you're holding the 0.5 as support. I would look for the 0.382 here as the next support level at 14 cents. So potentially set up some buy limit orders in that area as well. As you can see, you have wick to this area previously during the last year's move, and you have wick down here in September of last year. So that's it for the for this large Fibonacci retracement. Then I want you to pay attention to this other diagonal resistance trend line. So I'm going to change the color of this one to yellow so that it's easier for you to see it. And you have your first touch here March last year, you have your second touch in April last year, you have your third touch in October last year, then you break out in November. And I did tell you that you are going to come back to test this support trend line, and I was talking about this back in November, is that once you break out, you usually come back for a back test of support. It's just how the markets work. And what happened over here is you landed below the golden ratio at 19.5 cents. You lost that. You lost the yellow trend line, which is quite negative. You're back testing both of these levels as resistance, and now you're coming back down. So you're back testing the golden ratio. You're back testing the yellow trend line as resistance. They push you back down to these support levels. Now, if they're going to hold, great. If not, you're going to be looking for more targets to the downside. Like we said, this low is important to hold. We want to hold the low that we printed in May/July. Now that's regarding the yellow trend line, and the 20 EMA is coming back down. As you can see, the 55 EMA is quite behind it, and there is a gap in between them. So I am expecting a relief rally. I'm expecting some sort of a move to the upside. Potentially we could print a lower high from where we are right now, let's say to the 786, right? An impulsive move of 46%. Something that could happen. We might get rejected from the 55 EMA by that point and then come back down even further, simply creating a lower high. Now, let me just bring back the Fib retracement here, the smaller one that I was talking about, and let me remove the larger one. So on the smaller one, we have our swing high here in November, and we have our swing low here. Where was it? Yep, here in December. I think December is where we have it, right? Let me just get rid of that. Let me get rid of that. And yep, this one in March. I do apologize. So from here to here, and you get your 1.618 target. But I do think I have to move it down a little bit. I don't know why. Sometimes the fibs, sometimes the fibs get messed with, and I don't usually see it. So this is the correct way of the fib. I do apologize because you can't have any lows in between the swing low and the swing high. So you have to choose the high, you have to choose the low. And what we've done now is we've landed on the 1.618 fib retracement over here. As you can see, this is your target to the downside once you lost the first fib level, okay? As you can see, this is something that played out perfectly, right? You landed on the 1.618 and now you're holding it as support. Now, let's say you start losing this low and you start losing the 1.618. We take another fib retracement, right? And you simply draw it out and see what are your next targets. So the next target is going to be over here, just below 15 cents, the 1.618 that we have over here, if you start losing this low May 12th, okay? And you back tested the 1.414 here as resistance as well. You did the same thing with the 1.272. So you're in a nasty downtrend right now. Potential targets below 15 cents. I would say anything below 15 cents is a great trade in my opinion. So let's see what happens with the markets. So I brought that back, and let me just fix up the fib real quick. So thank you all for watching. If I missed out anything on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. I do post technical analysis in there, and also I do drop in some useful information from time to time. Also, I do have a Patreon, which is a great way to support me and a great way for you to get more exclusive content, trading alerts, low cap gem calls. We're going to have another low cap gem before the end of the month. And we do have project highlights, market sentiment analysis, video requests from my patrons, and TA requests from my patrons, and the same benefits you get if you become a member here on YouTube. So thank you all for watching. I'll catch you in the next one. Goodbye and good night.